Good morning, good afternoon, or good evening, depending on where you're joining us from. My name is Jason Buffington with Veeam, and you'll notice that this week I'm not being joined by our normal co-host Dave Russell, but instead one of the other colleagues, one of the other vice presidents of strategy within the office of CTO, Jeff Reichard. Welcome back to the show. Always a pleasure to have you on.
It is great to be on. I enjoy every time y'all invite me to come and talk about our research and what's going on in the industry.
Well, and that's a great setup, right? So what we're going to be talking about today actually leans really into your expertise. Arguably, no one better at Veeam for this particular topic coming up. But now let's hit the map really quick to make sure we're coming from. So Jeff, you are from Connecticut this week. Where
That is
where are you
exactly
hailing
right.
from?
I am in Connecticut.
I hail from the great state of Texas. As does our social media. We also have our producer out of Georgia. So we're represented on this side of the pond, as well as some other support team folks that are coming on from elsewhere. But we want to find out where you're from. So please feel free to pile on the chat for today. Also, if you have questions, one of the things we love about having experts like Jeff come on is to really get some depth experts from the front lines. Today, we're going to be talking about the money. Right? Where does the money come from when ransom gets paid? One of the things that I have started to talk about pretty frequently is ransomware will cost you money, right? You will either spend money proactively in to prevent, or you will spend money reactively during the ransom. But one way or the other, money will change hands as part of the ransomware scenario overall. But Jeff, let's first set some context on this is part of our ransomware series. And that series was actually inspired by some data that came out of our data protection trends report. Let's go ahead and take a look at the first data slide for that, just again to kind of get us into a level set perspective. Now, out of the data protection trends, this is the largest independent research project of its kind. 4,200 responses worldwide. When organizations were asked specifically, can you speak to your organization's cyber strategies? 1,900 folks from 28 countries around the world responded to that. And Jeff, just to kind of lay it out here, so in that survey, we actually asked organizations, how many times have you been hit by a ransomware event successfully over the past year? And unfortunately, only 15% of folks said no, which is actually down from 24% year over year. I want you to weigh in, but I'd like you to go ahead and click through one more element on this, because what I think is really amazing about this particular stat is some folks got hit once, some got hit twice, three times. You just muted those out. On that right-hand side, you got hit four or more times. Right. It was almost like a quarterly event, the same way that you quarterly review your HR and your revenue and your other operational tasks, reviewing those quarterly results. In fact, globally speaking, more organizations got hit quarterly by ransomware than believe they didn't get hit at all. And Jeff, I would say in some of those cases, some of those folks that think they didn't get hit, they've been permeated. They just don't know it yet. What are your thoughts as far as the angst and the hype and the reality of the frequency of ransomware overall?
Well, what we're going to be talking about today is the effect that this scourge of cybercrime is having on the industry overall. And I think this slide lays it out really well. You are more likely to get hit four times or more, according to Veeam research, unbiased research over 4,000 organizations worldwide, than you are to not get hit at all.
Yeah.
The average was 2 attacks per year, 2.2. And if you think about 85% of respondents, not all Veeam customers, these are just random organizations, most over 1,000 heads in all different verticals. We're going to look at some details of what actually happened when the ransomware attack went down, how they responded today. But setting the stage, it is overwhelmingly likely that your organization is going to be exposed to this risk this year. And folks just need to be aware of that. It doesn't matter where you are. It doesn't matter the size of organization. It doesn't matter the industry you're in. This is the environment that we're dealing with right now.
Exactly. All right. So with that as the context, let's give one more quick data point before we go to the map for the first time. But let's talk about how bad it gets. And again, I just want to get you through these stats because we want to get to the new data for our topic for today. But now knowing that 85% of orgs are going to get hit at least once, let's kind of talk through how bad it is when they get hit. And I think that's going to be our justification for why the money is so frequent and where that comes from along the way. Two stats here.
Yep.
On average, when organizations were asked about what happens when they get hit, uh, 39%. And let's just go ahead and round that up. Let's call it 2/5, 40% of data. And the example I typically use for this, 2 out of 5 hard drives, 2 out of 5 mailboxes, 2 out of 5 applications. Jeff, you and I are both proud parents. 2 out of 5 of your kids' pictures when they were little, right? You don't get to redo those, right? We can't go and just recreate many of these kinds of data that's out there, but on the average, 2 out of 5. And Jeff, that's the average.
Right, right, exactly. If you look at this, there were a terribly unlucky 7% who had more than 80% of their data gone, right? 61 to 80% is 19%. So if you add those two numbers up, we have more than a quarter of respondents to this survey who got hit by ransomware who lost well over half of the data in their estate. And of course, that's not the end of the bad news, because then we have to talk about how successful they were getting it back.
Right. And again, this is a great example. This is a great time to remind folks not Veeam customers, right? So this is an unbiased panel of organizations that said they got hit. In this case, the basic math says they got to recover about half. Now, we actually do have some data from the ransomware report that's maybe a little bit more optimistic. It gets into the 60s, but still, give or take a few, about 3/5 data comes back. And if I just do some simple math here, Jeff, if 2/5 are gone, and you can get half of whatever was affected back, you're still losing basically a fifth of your production data on average. And this is why so many organizations are willing to pay that ransom. So hey, let's dig in the map because some of the first stats that you're going to share actually have some geopolitical ramifications along the way. So let's figure out where folks are coming from, and feel free to continue to put your comments in. We'd really like to know where you're from, and ask Jeff the really hard questions while he's here, because just put those in the chat as well. But as far as where we're from, let's see. So we're looking at so Washington is representing great up in the Pacific Northwest of the United States. If we look back to the old country, it looks like Germany's in the house, and I think that's Serbia. And we don't get Serbia very often, so thank you for joining this morning. Go down to Latam, we see Costa Rica is in the house. Also, South Africa. So many good friends in South Africa. In fact, I think South Africa is getting ready for their Veeam Tours event next week,
Next
and
week, yep.
somehow my invite got lost in the mail. So I think Michael Cade must have stolen my invite, but he's down there instead. And then Pakistan is in the house. So please continue to light folks up and let us know where you're coming from. Jeff, okay, so we know that ransomware is a when, not an if. We know it's going to be worse than you think. We know that given to their own druthers, you're not going to be able to recover as much data as you'd like. So let's transition now to kind of slow this down a little bit and talk about why you're here. Let's talk about the money.
So the bad news is, and this relates directly to the groundwork we just talked about, the overwhelming majority of organizations that get hit by ransomware pay the ransom. They pay the ransom regardless of whether they had an internal policy forbidding them to pay the ransom. And if you notice, the red bar in the center of these graphs indicate the not pay policy. Frequently, they pay the ransom even if there is a government or regulatory policy against doing that. And that's very interesting because, at least here in the United States, it's been mooted in a number of places that organizations would not be allowed to pay ransom. North Carolina, the U.S. state of North Carolina, most recently put that kind of policy into place. And so, great to think that, great to plan on that. But if you're a bank and you're facing down the prospect of losing data for 20% of your customers, as we just talked about, 20% of the bank accounts, 20% of the insurance policies, whatever it may be, going away, unfortunately, organizations decide to pay the ransom. What surprises me about this, and what I find deeply notable, and we'll compare it with some other metrics in a couple of minutes, is how consistent this data is across the different geographies. There are small margins of difference, but overall, it's somewhere in the 40 to 50% category that had a policy to pay a ransom if push came to shove. It's somewhere in the region of 30 to 37% that had a policy not to pay. But again, in reality, only 20% of organizations chose not to pay when they were facing down actual data loss and the business impacts that they were facing. Very sobering and very democratic in terms of the regions that it affected.
Jeff, I think the thing that actually drives me the craziest on this slide is the gray. Right. The percentage of organizations that said we haven't decided yet whether we're going to pay or not. And I know you're a big sports fan, and that'd be like the coach saying, we're not going to run a playbook. We're going to decide what the play is going to be during the big game. Right. No one would do that. Right. So, I mean, as much as I hate, there's a couple things in this slide I hate. First of all, I hate the fact that, so take a look over in Europe, 49% of the respondents in Europe said they had a policy to pay. Right? When half of the European victims have a policy to pay, in my mind, that's simply an encouragement to continue to be a ransomware bad actor because they have a policy for that. That said, for 20+% to have not gone through this exercise, it is easier for me to imagine the scenario where the organization said we will not pay. And then when they saw how catastrophically affected they were, they said, we didn't want to pay, but we're going to have to get the business back. Right. And we're going to talk about that later. That is easier for me to comprehend than to, in 2023, to not have already had the discussion and made a directional decision that was bought in by senior management. That gray drives me nuts.
It's absolutely crazy. You would think that no one could have their head in the sand that much in this day and age, but clearly there were some organizations that have not thought this through. So let's talk now, again, more great stuff from this year's ransomware trends report released just a few weeks ago at VeeamON. We know that 4/5 of organizations paid the ransom. How did they pay the ransom? Let's talk about that. And if you look at this, there are some interesting things about this. We asked, did you have insurance and did it pay the ransom? Did you have cyber insurance and did it pay the ransom? What's interesting to me is if you notice, 28% of organizations had other kinds of insurance, general liability, property and casualty insurance, whatever, that was broad enough still to have coverage that it would cover ransomware events. 49% covered it with cyber-specific insurance. And we're going to talk in a couple of slides here about some of the changes in the industry and some of the regulatory changes that are being contemplated right now. If you think about what's been happening to the cyber insurance market with the scale of ransomware that's been going on for the past several years, and just as a reminder, at this point, NotPetya, which I remember vividly, that's a 6-year-old attack, right? We're talking summer of 2017, NotPetya came out. Some of the litigation around insurance, with insurers saying we don't want to pay for this because it was regarded as an act of war between two countries, that actually, when that attack took place, it was announced as an act of war by the US and UK government and others. That litigation was going on until last year. And the market for cyber insurance has been tightening in some interesting ways. You'll notice there are 18% of respondents who responded to this who chose not to pay, even though they had an option to do it with insurance. And Jason, I think all of us can draw analogies to our daily life, to our personal lives, about why an organization might have made that choice, right?
Right. So certainly there's scenarios around, I don't want to have to do disclosure. right?
Hmm.
If you're not a publicly traded company, you might have some wherewithal there. I can tell you that when I was growing up, if I just kind of bumped a fender of my car versus another car and I could pay $500 out of my checkbook as opposed to letting my insurance company know that, yes, I had made a poor choice. I mean, there's all kinds of analogies that go from that. But actually, the analogy that's kind of been sticking with me ever as I listened how you described that, we talked earlier about how the vast majority of percentage, 80% plus, did pay the ransom. I wonder if maybe part of that was due to the fact that they were paying not with their own money. Right, so I mean, Jeff, your kids are in your mid 20s. Mine are not quite that far down the curve. And I remember my teenagers used to say, "Yeah, okay, I'll pay that," when it was dad's money.
Right.
And then when they started paying with their own money, it's like, well, maybe I should do something different, And all of a sudden, it became more precious, and maybe some other parents in the call can empathize with that. And I kind of wonder if maybe one of the reasons, other than hey, we're down and the business is hemorrhaging money and everything else, is oh, by the way, it's not my money that's paying the ransom. But I think there's a trend there that's going to become less and less an option, kind of like those older teenagers coming off of mom and dad's payroll. Jeff, give me your thoughts on that.
It's completely true. There has been study after study, and I'll speak to the U.S. regulatory environment first, because that's the one that I'm most familiar with. But I know from reading the news that these kind of talks are happening in the U.K. and in the European Union as well. There have been conversations after conversations going back at this point over 3 years with different parts of the U.S. government taking a look at the cyber insurance industry and asking questions like, do we need a federal backstop for cyber insurance so that in the event of a catastrophic event, let's say another attack of the scale of NotPetya that happened in summer of 6 years ago, do we need a federal backstop as the federal government essentially to be an insurer of last resort so that the insurance industry doesn't get wiped out if an attack like this happens? There's some back and forth about that because what we've seen is that while there are still some lobbying requests from the industry for that kind of a federal backstop. Again, I know directly here in the U.S. and in the U.K. and other parts of Europe, there are also very healthy responses that are beginning to happen in the insurance industry itself. This risk is beginning to be factored into what the industry looks like. And we're going to look at some of those specifically from the research on the next slide, but I think we've got some map updates that we can take a look at now, right?
Yeah, let's go ahead and take a look at the map and see where folks are coming from. It looks like it's actually been kind of a light week this week. So over in the U.S. is remaining relatively unchanged, but over in Europe we've got Ireland representing. In fact, Jeff, weren't you just? No, you were Scotland. And then France is also representing today, and then also Bulgaria. And Saudi Arabia is in the house. That's always a great big green chunk of the Middle East. So thank you for joining for that too. So Jeff, so we talked about from an insurance perspective, that's actually starting to get a little bit harder. Could we maybe you have a slide talking about how coverage varies by region a little bit. Can we kind of double click into that and talk about those variances and where that market's going?
Yeah, absolutely. So the regional differences, and we'll take a look specifically at the effects. We'll go back to that last slide that we had up briefly in a minute. But if you take a look at the effect that ransomware is having on coverage, you'll notice ransomware coverage or cyber insurance is actually the norm now. It is not the exception. If you take a look worldwide, we've only got about 5% of organizations that previously had ransomware or cyber insurance and then got rid of it, or that have no interest in it at all. We have that gray bar, an interesting percentage of organizations that are looking for but don't have cyber insurance. And part of the reason for people to be in that state is that the controls that cyber insurance companies are demanding of organizations have really, really escalated the proof that they want to see before they'll insure you. But if you look at the coverage itself, let's take the United States or North America. We have 65% of organizations who have cyber insurance, and it also covers ransomware. But 20% of organizations here in the United States have cyber insurance, and it explicitly excludes coverage for ransomware events. It'll cover damages that you might suffer as the result of downtime on the cyber side, or damages that you might suffer as the result of a straightforward data breach, independent of ransomware, but won't cover ransomware events. What's interesting, and again, we'll get back to the global response because we've got people from all over the world on the call today. What's interesting, if you look over on the far right at APJ, the percentages are just about exactly even of organizations that have cyber insurance that will cover the ransomware attack and organizations that won't cover a ransomware attack. I mean, 40 versus 39%, really astonishing to see how the market has hardened up and how standards have changed in that area, don't you think?
Yeah, it's interesting that, basically what the data says, if you normalize it over the global data, is roughly 80% of respondents do have an insurance policy of some kind, right? So you can, if you strip off the reds and the gray is looking, and then the reds are no and not interested kind of things. But if you strip off that top 20%-ish on each, in roughly 4 out of 5 organizations in every geo actually have some kind of insurance that relates back to IT, and some kind of a guarantee. And yet there is some notable differences. I would argue, and Jeff, maybe I'd love to hear your response on this. Europe had the highest percentage of insured where ransomware was covered, whereas APJ had the least percentage where ransomware was covered. So even within that 8%, that mix of dark green to light green, and on that last slide we talked about Europe had the highest
willingness to pay.
Willingness to pay.
Yeah.
And they had the highest percentage of if you have insurance, it's covered kind of thing. I kind of wonder if that's a circular challenge.
Right, exactly. The argument for a long time for banning ransomware payments or for having organizations voluntarily decide we've got a no payment policy is that paying ransoms is a moral hazard, right? We're encouraging bad actors to do bad things. And at this point, it is a multi-billion, and I've seen estimates that within this decade, it will be a multi-trillion-dollar annual drain on the world economy. This is absolutely a successful big business at this point. Now, we're getting better at hunting ransomware bad actors on our networks, but unfortunately, they're also getting better at detonating their attacks. What's interesting to me, if we dig in just a little bit deeper into the insurance model, and this is probably the last data point that we'll look at for today, I know, Jason, I don't think that I've had for the past 3 or 4 years a single conversation with a customer where this subject has come up, where they have not said, yes, we are finding deep effects on our cyber insurance based on the ransomware epidemic. If you look at the numbers in this piece of research, the percentages, this is not a pick one. This is a case where respondents were allowed to choose more than one answer. So the numbers go up higher than 100%. 74% of respondents have had the premiums increase on their cyber insurance policies. 43%, almost half, bigger deductibles. They are on the hook to pay more damages themselves if an attack takes place. 10% benefits reduced. Only 8%, so a very small number, have sailed through this ransomware epidemic without being affected on the insurance side yet. It's actually quite astonishing that there are still 8% who have not been affected by changes in their cyber insurance due to ransomware. And all of the effects have been negative. There's not a case where, oh, yes, we've had our policies get more permissive, right? Not only are your premiums going up, not only are your deductibles going up, not only is your coverage decreasing, but even to get insurance, you have to, again, show that you've got your act together in ways you didn't used to have to show. There was actually an interesting story with Travelers Insurance here in North America from last year, where they had an insured of them, a customer of theirs, get hit by a ransomware attack. The customer had asserted that they had one particular control that insurers often look for, multi-factor authentication, in place throughout their environment, especially for all their administrative systems. In the aftermath of the attack, Travelers had an incident response team that went in to try to help. this poor organization that had been hit by ransomware recover. And they found that, well, in fact, there were administrative systems that didn't have multi-factor authentication in place, and that was partly to blame for the fact that they got hit by ransomware. And they fell back on a playbook that has taken place before and said, look, we had our insured tell us that they had done certain things. If we make the analogy to fire insurance, this company told us that they had a sprinkler system in place. After the building burned down, we found out they didn't have a sprinkler system in place. We're not on the hook for insurance. That was Travelers' argument with this insured, and they actually prevailed. And it didn't drag on for years. It was less than 6 months that judgment came through. So really something to think about for organizations. And I hope if you've been having the conversation with executive and financial leadership in your organization about what you should be doing around cyber controls and what you should be doing around cyber insurance, that this research is useful for you. I will just say, as we always do, Jason, if folks want to see more of the research, there is a link, and I'll let you tell folks what we're going to be talking about in the next Industry Insights and what they can look forward to this week and next week.
Jeff, I wish some of these calls were an hour long. I could just listen to you forever. Some of the stories that you bring up in the real world really kind of make this a lot more tangible. All right, so this Thursday, Rick Vanover is going to have Matt Bator on. We were talking about version 6 of Kasten that was announced from main stage at VeeamON 2 weeks ago, so you're not going to want to miss that. You know, for these last couple of weeks, Dave and I, and now Jeff and I have been talking about how bad has ransomware been from these ransomware events. Next week, we're going to start to pivot a little bit. So we're going to look at what kinds of storage organizations were using prior to the cyber attacks, as well as what they're using now. Punchline, immutability is going to be the punchline. We're going to hear about that a lot next week. And then lastly, we've been talking a lot about all the content that came out of VeeamON. It is not too late to register for the event that happened 2 weeks ago, because if you do, you can still watch most of the sessions and content that are there. Let's take a look at this recap video. If you haven't yet, sign up. You owe it to yourself to get educated. This is a great opportunity to do that. Let's roll the video. Thanks for watching. Jeff, thanks for joining. Have a great week.
Thanks, everyone.
Welcome, everyone, to VeeamON 2023. How are we feeling in Miami?
Your choice, your partnership, our journey together. Veeam is #1 because we have the #1 community on the planet. We would not exist today, let alone flourish, without these 450,000 plus customers around the world.
Technology and innovation starts with the crowd in this room and the crowd that is online. This is about your business. This is about the market and taking it forward. And we thank you for your partnership in that. We keep your business running.
Tonight, 2023 VeeamON, the best in show is virtual DCS.
So you know we go big. Be ready.
Who's ready to get this party started? Thank you for all those that participated in Lab Wars.
Chris Rustin, $10,000.